Hello and welcome to today's edition of Charting the Markets. Here with me, Sean Murison, Senior Market Analyst at IG South Africa. In today's economic calendar, we do have core PCE index data out of the US, and it's early afternoon, and obviously a key measure of inflation for the year, so we'll definitely want to watch. We also at early afternoon have that durable goods and core durable goods orders out of the US as well. Let's look at some charts, and starting off with the DXY, or US dollar index, US dollar basket. The long-term trend for that DXY does remain down at this point in time, but in the short to medium term, we are in the sideways range and we're trading between those levels, still considering a short bias in lieu of that longer-term uptrend. But right now, we haven't stopped rallying. We've broken through resistance here at 103.15. The next resistance target sitting at 104.35. Now, we're waiting for a bearish reversal before this level, before considering short entry, in which case we start targeting a move back towards those lower levels. Where do we start changing our bias? Well, we need to take out this major high at 105.30, which is still a little while away, but only on that will we start thinking, well, maybe we've moved out of that longer-term downtrend and could be considering a new uptrend or a broad sideways range-bound environment. But for the short term, we are still rallying at this point in time. With that longer-term trend bias in mind, we're waiting for that rally to end with a bearish price reversal before considering short entry. In that situation, we look at the reversal high as a stop-loss indication for a trade. Moving over to the euro dollar at this point in time. So longer-term trend is still considered up with that price trading above that blue line, our 200-day simple moving average. We can see with the 20-period moving average, that red line crossing below that 50-period moving average, the green line, we do have a short to medium-term correction underway of that longer-term uptrend. So we're waiting to see where this finds support. Our next support level here is sitting at 1.0685. And so we'd like to see a bit of a bullish price reversal for that before considering a long entry. And if it doesn't hold, then we'd start looking towards our lower level here, 1.0513. Now, if we start trading below that, that's where we'd change our trend bias, because that would be the price trading below that 200-day simple moving average, that blue line on our chart, and below that, there's a major low on that. But up until that point, we're still backing that longer-term uptrend, although we can see that there's a short to medium-term correction, and we're waiting for that correction to give us some signs that it is starting to reverse. I'd like to see it move out of oversold territory and a bullish price reversal off one of our levels. Cable, similar picture, long-term trend up, short to medium-term correction. We're finding support around about this level. We did actually test just below it before bouncing. So we had a bit of a false breakout at this point. We'll see how today's session ends at 1.2343 being that level of support there that we are watching. If we do close below today, because the gains today start to unwind, then we target the next level there of 1.2160, but we're still not looking at shorting cable at this point in time. We'd be waiting for that weakness to play out and look for a bullish reversal for long entry, preferably accompanied by a move out of oversold territory. If we do get a strong close today, that could actually consider a reversal at support, and then we could consider that short-term trend realigning with that longer-term uptrend. Moving over to some indices now. In the US, starting with the Nasdaq 100, which is an outperforming index globally, and obviously against the majors in the US as well. See that longer-term trend remains up. In the short term, we've had a continuation of that. We had a break above resistance at 13,730, and now we are targeting our next level of resistance, considered about 14,390. Traders along might want to think about trailing a stop loss, relatively tight stop loss with this accelerating trend line here. Just a sharper, steeper trend line we do have running underneath the price on that Nasdaq 100. S&P 500, not looking quite as healthy in terms of its uptrend, but it is still in a longer-term uptrend at this point in time. We've had this, we were talking about this range between 4050 and 4185. Over the last week, we did have a breakout. We didn't have an upside breakout. That breakout didn't really work out very, very well. We've seen a pullback since then, the price now finding support on that 50-day simple moving average. Now, we have a bit of a bullish price reversal that's formed here. These two candles, if you exclude today's candle, the two previous candles, we had this intraday reversal, which was that long wick, that hammer type formation. And then we had this second candle here closing above the halfway mark of that. So that does actually meet the criteria of a short-term reversal. So we've had a breakout, we've had a bit of a pullback, and now that pullback does look to have ended. So Aggressive traders might consider this a long entry type signal, having a stop loss below that low there at about 4,100 on that S&P 500, targeting a move back to that short-term high of about 4,210. In Europe, we have the DAX, which has just come off highs, moved from overbought territory after a bit of a false break of that 16,300 level. But now we have that first pullback since that move higher, and we are testing the 15,715 support level. So if this level doesn't hold, we look to our next level there of 15,485. We're not looking at shorting any of this move lower. We're still waiting for a bullish reversal for long entry, because we are keeping it long bias with that trend. And we are starting to look oversold at this point in time, but the price is still falling. So we want to see that price just ticking back. Ideally, a strong close, maybe a close above the previous session's open, which would be more or less the high of that small candle we see there, to get a reversal there. If that doesn't happen and we trade lower like we are now and close below 15,715, we'd look at 15,485 as our next level and look for a bullish reversal of that level for long entry. The FTSE 100. Now this chart's it looks like a bit more of a range-bound environment over the long term. See that price is testing support at 7,560 right now. If this level doesn't hold, we start looking to our next level there of 7,410. Now, because this is considered more of a range-bound environment, we're not as strict on a long bias. We are looking at longs and shorts. So if we do have a downside break, maybe having a stop above the previous session's opening price might be a consideration. Depends on how it breaks. Otherwise, it might be worth just waiting out weakness and looking for a bullish reversal at one of those lower levels of support. Next one being 7,410. So we are already in oversold territory right now on the FTSE 100. Moving over to some commodities now, starting off with Brent crude. Now, we still think that longer-term trend for Brent crude is down at this point in time. We have that price still trading below that 200-day simple moving average. In the short term, we had a bit of a rebound from oversold territory. That rebound from oversold territory has been more of a consolidation, so it hasn't had much conviction, and it does look like we might have ended with this bearish engulfing here. So tentative reversal here, targeting a move back down towards possibly 73.20 or 72.20 initially on that move down. And if we're looking at shorts there, maybe having a stop loss above that reversal high there, about 78.42 might be a consideration for that trade. Now, gold long-term trend is up, so our bias for trades on gold remains to the upside, but we have had a short to medium-term correction, or short-term correction at least, and that's brought us to this confluence of support sitting here at about $1,945 per ounce. Now, today's candle is suggesting a bit of a bullish reversal here, so ending that move lower. We'd like to see a bit of a strong close, at least where we are now, maybe even a little bit higher, in which case we start targeting our upper levels there, 1,980 and possibly 2,005 dollars per ounce. And in that situation, we'd looking at a close below that trend line support, that channel support, as a stop loss indication for that trade setup. Last but not least, we have silver. It also looks to be completing a bit of a short-term correction of what can be argued as a longer-term uptrend. We do have that 50 above that 200-day simple moving average, and we do have the price finding support just above that 200-day simple moving average right now. And we have this bullish price, bullish engulfing price candlestick reversal in play at this point in time. And that is supported by an oversold signal. So we'd like to see the price close where it is now, or at least above the halfway mark of that preceding candle to mark the end of this correction lower. And then we'd start considering a move back up towards that 24.30 mark on spot silver. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Thank you very much for watching. And do watch out for that core PC index data out of the US early afternoon.